Well, good morning, everyone. Today is December 5th. It's Thursday, and we have jobless claims today. Now, the last few weeks, the number was, and again, this is not a concern, and quite honestly, between you and I, it's not going to have a major impact on the market, not with this trade talk, not with this tariff talk, unless the numbers are grossly out of line, and they're not. Jobless claims are unemployment is near 45-year low, so it's not a major issue, but we have seen a slight uptick. No concern yet. I'll keep you posted, but the numbers are slightly moving higher. The change here is negative 15,000. So if the number is between 210, 215, and 230,000, nothing to really worry about. If the number is widely above 226, and I don't think it's going to be that, not even close. I think we're going to fall right into range. Don't really expect much of an impact from the stock market or the bond market. It's pricing in positive, favorable economic data, low rates at this time. That's really not the issue. The major issue today is, once again, let's go here. My favorite issue of all time is the trade war. And again, yesterday it was negative, and today the sentiment is positive. And again, they're talking about reports came a day after Trump said he wouldn't mind waiting until 2020. Remark officially reported called off the cut, but nevertheless sent market skidding. So again, we don't know what's going to happen. I can't get inside Donald Trump's head. If you can, God bless. I can't. But here's what we do know. December 15th is our deadline. This is our deadline. Bloomberg News reports that U.S. negotiators expect a Phase 1 trade agreement to be completed before U.S. tariffs are set to rise on Chinese products on December 15th. So we actually have a timeline. Today's the 5th. That's 10 more days. I can assure you, I could almost guarantee you, we're going to have a rocky road till that time because there's going to be a lot of speculation. And now we have a date. This is a date. And if nothing happens, if we don't complete Phase 1 by this date, things are not going to be looking pretty at all. Now, stock market, S&P bounced off minor support, had a few down days, cooled off a little bit. Let's see if we're overbought still or if we're cooling off a little bit. Let's take a look at RSI. And folks, I'm looking at this first time in the morning just like you. So this will really give you a good analysis of how I look at the market in the morning when I wake up. So we're not overbought. We were overbought for literally, look at this. Since November, we were literally overbought for over a month now, since December 1st. We're literally overbought. We finally broke off because of what Trump said that he probably won't, that we can wait till after the election. And right away, we bounced back up. And what I believe is going to happen over the next few weeks is we're going to be in a tight range. It's going to be let's wait and see what happens. So expect the trading range to be somewhere between 315 and 307. Unless we hear really positive or really negative news, if we keep hearing what we've been hearing, expect a tight trading range. Now, this is the sector you've got to look at. This one has the most sensitivity to China, a lot more than the S&P. I would say that the Russell 2000 has about 8 to 10 times as much sensitivity to China as opposed to the S&P 500. So you really want to focus on this. And as I've been saying, it hasn't made new highs since last year. Now, we had a little channel. Now, what did I tell you? I told you I'm not going to buy in this breakout because I believe we're not ready yet. I believe the market's going to come down, consolidate, and then going to break out. So I'm watching this level carefully right now. And I want to see a few days, I want to see trading action consolidate a little more. Because if we do complete Phase 1 before December 15th, there's a really good chance we're going to see a good breakout in the Russell. So keep your eye out on the 163 level. Put an alert there, and I'll notify you if you watch me in the mornings. But put an alert there. But right now, there's a good chance we're going to be sitting between the 161, maybe 160, let's see here. Maybe right around, let's say 162. Let's just say 162 to 157. I don't think we're going to make new highs unless there's something really bullish about the trade war in terms of us working things out. Markets are still fragmented, but I want to show you something interesting. This is a setup called 4x4. It waits for 3 down days and then looks for stocks that are making a comeback. And in the entire stock market, we had 142. Now, typically when I have reversals to the upside, look at here, 1, 13, 7, 1. You could see here the numbers aren't really out of whack too much. When I'm looking at you don't know what I'm kind of looking at a bunch of different things, so you don't really understand the different setups that I have here. But the ones up here, these are the ones that are sensitive to the market trading higher and market trading lower after a few days. And we had 142 stocks yesterday that made 3-day lows and bounced high and closed in the upper 50% of the range. And to the downside, we had 13. That's the 4 bar high, and this is 4 bar low. So we had 13 versus 142. And again, you'll usually see like tail gap, tail up, tail down, 7, 1, 0, 0, 142 to 13. So the bias, you can tell that the bias really turned higher midday yesterday. And the sentiment changed, which is why you saw this yesterday. This is a 4x4. You have a high, and then you have 1, 2, 3 down days, and then the 4th up day, and then you're supposed to buy above the high. Now, I'm not suggesting you buy here because I think the upside is limited, but I wanted you to see the change in the sentiment on my setups. Here, let me show you some of these setups. Here's the SPY. It had a setup. You could see 3 down days, 1 day. Here's all these different setups. The financial sector had it. CBS had it. QQQ had it. Microsoft had it. All these stocks, 142 stocks had a reversal. So there's a good chance we'll see a little higher market, a little bounce back from the downside. But don't expect new highs in the S&P until we see something truly, truly promising from Trump. Volatility, I told you so. I told you we wouldn't stay at 12 forever. We were at 12 or actually 10, 12, right around this level for about 2 years, and finally we're breaking up. And I think volatility won't sink all the way back down. I think it'll be a little higher till we resolve, at least for another week or so. So expect volatility to stay on tippy toes, if you will. Expect the Russell to stay in a trading range, and expect the jobless claims to be uneventful. If they are higher than 226, that means Fed has ammunition to lower rates. That means President Trump can say, jobless claims are higher than expected. You got to lower rates. So if they're above 226, that gives President ammunition. And if they're below 215, that gives the Fed ammunition to say, no, everything is fine. We're not slowing down. So I kind of wanted to give you a little bit of a dynamic of what's happening in the market. We're not in a trending place right now. We're in a very stagnant place. If you look at my sectors, these are the 10 major sectors. And as you could see here, they're totally out of whack. Technology is still leading. Consumer discretionary is lagging far behind. They shouldn't be that far apart. Consumer discretionary and utilities should be on the opposite end of the spectrum. So markets are still very fragmented. And while they're fragmented, that means don't expect a big move. Very defensive. Stay defensive. Hopefully, we'll resolve this trade war within the next 10 days. If not, we can expect downside. Follow the Russell right now as your key indicator in terms of trading action, not the S&P 500. Folks, if you guys like these videos, subscribe to our YouTube channel. Send me a comment. I'd love to hear feedback. Either comment on the video or send a comment to support at Market Geeks. And I recently started uploading these videos to our Facebook Wealth Press channel. So go to Facebook and just type in Wealth Press or go to Facebook-Wealth Press, and you'll see them there a while before the market opens. I post them there about an hour before the market opens. All right, talk to you guys later. If you guys are getting something out of these videos, let me know. Support at marketgeeks.com. Have a great day. Bye.